Good morning, everybody. Hope the week is off to a fantastic start for you. In today's video, we're going to be taking a look at the Dow Jones Transportation Index. We're going to be taking a look at the Emerging Market Index. We're going to be taking a look at the Semiconductors as well. But first, we're going to start off with the S&P 500. Now, we still have our downtrend in place. We've had a heck of a bounce so far at the beginning of this year and the last couple of days of 2018. But what have we done? We've rallied right up into this 50-day moving average. So yesterday we hit it basically on the nose and then started to come back a little bit from it. We have a mix of moving averages. The 10 and the 20 are below price. The 50 and the 200 are above price. So short term, the movement has been higher. In the middle and long term, the movement has been subsequently lower. And when we don't have things lined up like that, that's when it's very difficult on a trading basis. Do you pay attention to the bigger time frame or do you pay attention to the shorter time frame? What I pay attention to is main key important levels. If you want to look at the bear case for this, this is could be known as a bearish rising wedge, right? We have a very sharp move up and prices consolidating right here at the apex or right at a resistance point. You would see a break and a move back lower if the bears were to win here. The other case that the bears make here is if we look at our fib retrace levels from the previous move, from the high to the low, we get a resistance zone right here about that 2640 level, that 50% retrace. A lot of times the market will make a move down, retrace half that move, and then continue lower. Same thing on the upside. The market will make a move higher. It will retrace about 50% of the move and then push and continue higher. So this is a very, very important level, not just from the potential of a bearish rising wedge, the 50% retrace level, but also if we just pay attention to straight horizontal resistance. Just right here. This is a very key level, right? We came down, we tested it, we held. We came down, we tested it, we held. We came down and we tried to hold it, and that's where we rolled over from. All right, so this was support. Now it's acting as resistance. It's also the 50-day moving average. It's a 50% retrace level on that fib, and we have a potential bearish rising wedge setup. What happens here is certainly extremely important. Now, let's take a look at a couple of other things. First, let's go globally. Let's take a look at the emerging market index here. So come in, it's MXEF. This chart, and we've talked about this quite a bit here over the last year or two. This line right here, if we extend it out to the left, is very important. It's at 900 level. It was acted as support way back in 2014, 2015. When we fell below it, it acted as resistance. And then once we broke above it, it acted as support. And here it is acting as support again. The bullish case here for the emerging markets is as follows. We put in a higher low. While the U.S. markets were making lower lows in December, the emerging markets put in a higher low. And this downtrend line that has been in place, we did make one 2-day breakout last year, which was immediately reversed. We're now back above that downtrend line right here. The major resistance is basically right at 1,020 on this index. If we get above that, i.e. get above the December highs, that opens up a move to the upside for sure. If we look at our fib retrace, right, there's still a lot of room to the upside just to get to that first fib retrace level, that 38.2, and to go all the way back to that 50%, it'd be about 1,100. So there's a pretty substantial size move that still could happen here to the upside in the short term, even if this wasn't the bottom, was just a bottom. You get that 50% retrace and then a potential rollover. There's also the 200-day moving average, which is above us, which is an area of resistance as well. But in the meantime, this has acted much better than the U.S. indexes in terms of price action. Put in a potential higher low, broke a major downtrend that had been in place for almost a year, and is trying to continue to push higher. Right? If the emerging markets are going to continue to push to the upside, it's very difficult to have the riskier emerging markets making continual moves to the upside and have the U.S. indexes roll over. Right? This is, globally, we're all going to kind of move together, and the emerging markets, a lot of times, as we saw last year, can be that indicator that things are really not good. The U.S. markets continue to make highs from about the middle of the year on. as we did this in our index, and the emerging markets continued to roll over, and that gave us that things were not great globally, and eventually the U.S. indexes ultimately did catch down towards that at the end of the year. So we're paying very close attention to what's going on in the emerging markets. Another very key level right here in at 1,020 on this index. Now, two of the things I always like to look at for the health of the U.S. market are the semiconductors and the transports, right? Semiconductors, the high beta names, right? When they're doing well, businesses is growing, technology is moving forward. So let's look at the semiconductors. What we have here is a consolidation zone where we did go and make a lower low, not by much. This could be viewed as a false breakdown, and now we're back up inside of this range, right? Trading very much like the rest of the U.S. indexes, where we are the 200 days above it. It's like right around that 50-day moving average, and the 10 and 20 are clearly below it. So very similar to the S&P chart that we looked at in terms of where we're at with the moving averages. This particular setup here is still under its downtrend from the second half of the year. We can clearly see that. We tried to come up and break above that earlier this week. That was a level we were really closely paying attention to, because I think if the semiconductors can really get going again here to the upside, that should put us back in a risk-on environment where people are willing to invest in the higher beta names, and typically we tend to do well when that is taking place. But we did get rejected right there at that 1230 zone, and so we're going to need to pay attention to that right here over the next week or so. And then if we get above that, the next level is really going to be about that 200-day moving average and the highs that were put in the beginning of December at that 1290 zone. Now, last but not least, let's take a look at the Dow Jones Transportation Index. I find that the transports are extremely important because that's how goods move around the economy. So if we are seeing the transports having issues, that can oftentimes mean that goods are not moving around the economy in the way that we would like them to, and that can kind of hint to a slowdown, and that is why the transports are really widely paid attention to. When we come in here, this major support level, which from the beginning, it was the 200-day moving average, but back last February where we had our sell-off at the beginning of the year, it held there, and it held at the first part of the sell-off in October, and we clearly broke underneath of that level in December, and we have made our bounce all the way back right into that major resistance level. The 50-day moving average is right about that 10,000 level, and if we look at the fib retrace on the transportation index here, what we're going to see is it's right at that 38.2, so a much weaker bounce than we saw in the S&P 500, and that can certainly be a little bit concerning. The S&P 500 right around that 50% retrace level. If the transports get rejected right here at the 38.2 and continue their move lower, that's a really, really weak bounce attempt in relation to the size of the move it made down in the last quarter of the year last year. So we're really going to be paying attention to that right here. Bottom line, we take a look at most charts, we're at key levels of retracement from the sell-off that we had at the end of last year. What happens here is very, very important. We could have a news-driven event that pushes us higher. Maybe something works out with the tariffs in China. Maybe the government shutdown resolves itself. Maybe the Fed continues to stay dovish. All of those things could add fuel to the fire and kind of push us higher. If none of those things get resolved, we have made kind of our relief bounce from really, really oversold conditions. We're going to need something to push us higher. Last but not least, it could certainly be earnings season, which we are headed into right here. It comes off as very strong. Some of the banks have done fantastic thus far, and that could certainly push us higher. But we're at a major technical resistance level, so we're going to be paying attention to that. We'll continue to look at this. I will update you guys next week. Any questions, comments, feel free to leave them. I hope you guys have yourselves a fantastic week. And as always, I will see you guys next week. Take care.